Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Speaking to CNBC TV18's CNBC's Steve Leisman from the sidelines of the Jackson Hole Summit, he talks about the Fed's rate trajectory and what he makes of the growth in the emerging markets. Here's a slice of that interesting conversation.
He did mention that the Fed was on the lookout for that. I do worry that in this period of accommodation, we've had an increase in leverage, not in the same places as before, in new places. Of course, the emerging markets, but also the corporate sector in the United States. And leverage plus asset prices plus rising interest rates, that's not a great combination.
Given all of that, would you be steering the Fed the way Chairman Powell is steering it with gradual rate hikes, or do you think there's a need to remove accommodation and liquidity faster?
No, I think, as he said, you're sort of steering between two pitfalls. One is going too fast and tanking the economy, and the other is going too slow and raising questions about whether you were at the right pace and then suddenly people think you're going to go faster, which is equally problematic. I think they're doing a reasonable job of advertising what they're going to do, but also doing it and not backing off as a result of market volatility and so on. I think if it gets big, and I think he hinted at that, they may reconsider, but at this point, they're moving at this pace.
One of the fallouts from higher interest rates has been some disruption, maybe that's too kind a term, but trouble in some emerging markets. Turkey is one particular example that's been out there. Is that a unique case, or is that the sign of things to come in some of these emerging market countries as a result of an appreciating dollar and a higher Fed funds rate?
Well, I don't think it's unique, but I do think it's an outlier that Turkey has had some pretty significant buildup in corporate debt, especially foreign exchange denominated. And Turkey has also had some bad policies, including the idea that inflation is controlled by keeping interest rates low rather than raising them. And I think as a result, that has upset markets, and Turkey has suffered some of those consequences. Of course, Argentina was before Turkey. Argentina did many of the right things, but did them a little slowly, and the markets again lost patience. I think there are other countries which have problems of large current account deficits, large fiscal deficits, and possibly political change. And they will have to react when the time comes in a way to reassure markets. But in some sense, I think we hope that these two countries are outliers, not an
How about
indication.
India? Is India something that creates concern for you?
No,
in this context?
I think broadly India has had reasonable macro policy over the last few years. I think there have been some aberrations like the demonetization, which slowed growth considerably. Growth is picking up right now. And, India has reserves, 400 billion plus. So it's in a much better position than it was in 2013.
Okay, so India is in a much better position than it was in 2013.